Hello and welcome to my YouTube channel. In this tutorial, I'm going to share with you a simple but yet very profitable trading strategy. And this trading strategy, we are going to be using free indicators, so you don't need to worry yourself. All the indicators that we'll be using for this trading strategy, you can get them in your MT4 or MT5 platform. So without wasting much time, let's dive into it. First, we are going to start with the Exponential Moving Averages, the EMAs. So we have 3 EMAs, 50 EMA, 100 EMA, and 200 EMA. So let's start adding them to the chart. So here, we add the 50 EMA, then we add another 100 EMA, and this will make the color to set the color to blue, and we add the third EMA, which is 200 EMA. Okay, so now we have these 3 EMAs on our chart. The next indicator which we are going to add is the MACD indicator. So we add the MACD indicator. So these are default settings for the MACD indicator. So now we have the indicators on the chart. So how do we trade this strategy? So let's start with the basics. So the moving averages, as you can see, the 50, the 100, and the 200. So the strategy is very simple. We have 2 stages. One is that we are considering the point when the 3 moving averages are lying one on top of each other. That means the 100 is above the 200, the 50 is above the 100. So once we have this condition and the price is above, as you can see here, the price is above the 50, the 100, and the 200. So what we look for again is to ensure that we have the MACD indicator, which is serving as our filter, above 0. This is a condition. Once this condition is met, we are now having a full confidence that we are in the uptrend. So once we have an uptrend, how do we enter the market? When the price go below the 50 EMA and close above the 50 EMA, we open a buy trade. So like here, as you can see, at this point, we have our conditions met, but we are not entering the market yet. We wait for our buy trigger. The moment the price go below the 50 EMA and close above the 50 EMA, we open our buy trade. Then our stop loss is placed at 200 EMA, and our take profit is 2-to-1. Our risk is 1 and our profit is 2. So our risk to reward is 2-to-1. Here again, we have the price go below the 50 EMA and close above the 50 EMA. We open another buy trade. Here again, we have the price go below the 50 EMA and close above the 50 EMA, we open a buy trade. Remember, our stop loss is always at the level of the 200 EMA, and our take profit is 2 to 1. So if here, as you can see, when we open this buy trade at this point, our stop loss is 60, so our take profit is 120. So our take profit will be here for this trade. If you can see here, when the candle was forming, the price break below this 50 EMA, and again when it finished, it closed above the 50 EMA. This is our trigger. So if you see, we open, the moment the candle close, we open our buy trade. You can see the stop loss here is 48 pips. So our take profit is 48 pips. So we are targeting 96 pips. So in this case, we are targeting 96 pips. So if you see, our take profit must have been hit at this point. Our take profit must have been met at this point. And here we entered, and our take profit will be at this level. So here you see price break below, we entered, and here is our stop loss. Our take profit is up here, but this time around the market did not go our way and we get stopped out. So you need to be aware that in trading, sometimes you make loss, but your main protection is your risk management. As you can see, we are managing our risk very proficiently. So here you can see at this point the MACD indicator is giving us a sell signal, while the EMAs are still pointing in upward direction. So which means at this point we don't need to make any trade. So we wait, and here again we have the MACD again in the same direction in agreement with our EMAs. So here we wait. We would have gotten a signal here, but there was no signal. So we don't just jump into the market, we wait for a guaranteed signal. You can check some other currency pairs to see where you have a good signal. At this point here, you can see at this point in CAD JPY, we have a good signal here, and this here is our stop loss. So if we enter the market here, and here is our stop loss, which is 50 pips, so our target is 100. So you can see there is something we need to also learn, that as the trade is moving our direction, we need to be moving our stop loss. So the moment we have 50 pips in our direction, we move our trade to break even, and we add additional 5 pips. So in case if the market, like what you can see here, try to reverse to come down to our stop loss, we can get stopped out on break even. In that case, we make a little profit, but we are not losing our capital. So we can also look for other currency pairs. For this strategy, I usually like to play it with the Japanese yen pairs because they move the way I prefer to trade the market. So if you can see, here we have our conditions met, and here we have our trigger. So this profitable trading strategy is something very good. Even if you are a beginner or you are a professional trader, you can utilize this strategy in such a way that you just have to discipline yourself to follow the rules. Because what causes a lot of problem with trading is a lot of traders, they don't follow the rules. You have to master the rules and keep to it in order to make a profitable trade. You can also see, if we check here, even pairs that are not JPY pairs, this we have a GBP CHF. We also have the same. At this point, we have our condition. Down here, we have our condition. And here, we have a trigger. You can see this is our trigger bar. And here is our stop loss. So here again is our trigger. Okay. Here again, you have our trigger. And you see the trend is going and the trade is moving in our direction. So try to understand this strategy and follow it as explained, and I believe you will really enjoy and make good money with this strategy. If you enjoyed this tutorial, consider to subscribe to our YouTube channel to encourage us in order to make more tutorials like this. Thank you for watching. Happy trading.